Nvidia is completely revolutionizing the AI market, and they're actually investing in AI stocks. On today's episode, we're going to look at two AI stock Nvidia currently owns a position in, and why I believe these could be multi-baggers for long-term investors. But more importantly, which one would I be buying at these levels of July of 2025? While both do have the growth opportunities, I do believe one has a better risk to reward ratio that makes me want to enter into this stock. So let's take a closer look in today's episode. All right, so we all know Nvidia is driving this AI era, and this AI era is continuing to grow. We're seeing AI technology being implemented into everything we use in our daily lives. Because of this, we are seeing the huge amount of AI compute and AI infrastructure. Now we jump into the 13F. This is where Nvidia shares the overall companies that they own at the moment. And the two companies that we're going to take a closer look at are CoreWeave, ticker CRWV, and Nebius, ticker NBIS. Just for overall full disclosure here, CoreWeave is the biggest position Nvidia has in their portfolio, and CoreWeave is the second smallest in forms of value, but I do want to say the opportunity for these players is insane because of the overall market demand. Now, because the opportunity is insane doesn't mean they're both a buy for me right now. I do believe one has a bigger risk to reward, or a better risk to reward ratio for me. Now, out of the two companies, I do own one stock. I do own CoreWeave at the moment. But remember, this is not which one would I buy 2 months ago. It's which one would I buy now. If you've been following this channel, you would have looked that we purchased CoreWeave here in the 40s, and we've been selling on the way up as the stock nearly 5x, which is pretty exciting, as this definitely did massive boost to my overall portfolio. Now, the question for today's episode is, which one would I be buying right now? And a lot of the information that we're going to see today is all possible thanks to Fiscal.ai. And this is a platform. If you're serious about investing, you need to use this platform. This one, we're going to see all the great ways that I use it. We're going to look at AI summaries, at slideshows, at graphs, at metrics, future valuation, and the list goes on and on. And that's why if you want to increase your investing toolbox, make sure to check out my special offer at fiscal.ai/Jose for 15% off and 2 weeks free. That's going to be the last time I'm going to mention any promotions. Like I mentioned, I use it on a daily basis and highly recommend it. All right, so the first company we're going to start off with is Nebius, ticker NBIS. The market cap of roughly $10.5 billion. Now, if we look here at Fiscal.ai, we're going to look at two things. First, the company recently reported their most recent event was their Q1 2025 earnings, which happened on May 20th of 2025. And I wanted to see what were some of the AI summaries coming out of this transcript. The first thing is this is a company that's revenue is growing nearly 400% year over year. Annualized run rate revenue grew 700% year over year. What I'm really excited about these players are both of them actually have strategic partnerships with Nvidia. And by that is Nvidia kind of doesn't play favorites, but kind of plays favorites. And Nebius is being one of the first AI clouds to offer one of NVIDIA's most recent chip, the Blackwell Ultra. So this is probably one of my biggest excitements in this AI infrastructure market. Having the first chips built and these data centers built quickly and first can definitely help you get long-term contracts, which are very beneficial and allow you to make a lot of profits off your data center space. Now, some other things is Nebius has kind of a full stack AI cloud solution. And we're going to see a lot of these different opportunities in their kind of slideshows. I also wanted to look at some of the kind of bearish sentiments that this company had in its overall business. So I decided to ask AI, can you give me management sentiment? What are the bullish case and what are the bearish case? The bullish case are the company sees massive growth, like we saw those massive 100% year over year revenue growth and massive annualized revenue run rate. The second thing is this company has various non-core businesses outside of the AI market that they can use to grow dramatically in the future. They have ClickHouse, Toloka, and AV Ride, which is something that focuses in autonomous driving. What they are maybe not too excited about is kind of the amount of capital expenditure that you need to kind of build this AI space. And now I kind of want to jump into the slideshow. And the great thing here is we can just click slideshow here, download it, and pull it up individually without even having to go to the company's SEC website. So here are some of the cool things about Nebius. So Nebius is a company that their main business is that AI infrastructure business, right? You're renting out this AI infrastructure to massive AI labs, to massive enterprises that don't want to buy out their own AI servers. They rather rent it out. Then you have AV-Ride, which is the developer of autonomous driving technology for self-driving cars and delivery robots. You also have ClickHouse. They own a minority stake here, about 28%, and it's a provider of analytical database for a host of applications. A lot of LLMs here. They have Toloka, which is significant majority economic stake in Toloka, a leading data provider for large language models and generative AI developers. And they also have Tripleton, which is an EdTech platform focused on reskilling individuals for careers in technology. Now, if you were to tell me what's the first thing I'm super excited about, obviously Nebius core AI infrastructure. That's what we're in here for. The two others are Toloka and ClickHouse. These are kind of software solutions that can be used to improve the AI space right now. And those two seem to be pretty exciting. Now, the kind of long-term call and huge opportunity in the future is AV-Ride. And this company has, or we've seen images of this AV-Ride actually showcasing vehicles in Texas at the moment. Maybe my least favorite is Tripleton, but regardless, overall, I'm super excited here. Now, within their core AI infrastructure, it's not just bare metals. This company does a lot of things, right? They have their data centers, they have their chips and hardware, they have their cloud platform, and they have also AI services with their AI studios. So all this helped this company provide more than maybe some of the other competitors out there and some of the other neo clouds out there. One of my favorite things within the AI infrastructure outside of the software stacks that they do is that they do design the servers in-house. And this is very crucial as it improves efficiency and reduces the cost of kind of obtaining these servers into their data centers. It might take a little bit longer, but having this definitely gives them another benefit and another way to reduce the cost of AI servers. In this slideshow, we can actually see Nebius is trying to really compete against the hyperscalers that do everything: HPC data centers, bare metal GPUs, AI-specific cloud platforms, and value-added services. When some companies only hit a few of these, like neoclouds usually only hit bare metal GPUs and AI-specific cloud platforms. So this alone is kind of already eliminating a lot of the competition and just focusing in that huge market opportunity. Now, the final thing is here in their medium-term outlook, they do believe that in the medium term, they expect mid-single digits billions of dollars of revenue. They didn't give an actual number, but this overall can showcase that this company is expecting massive revenue growth thanks to the AI infrastructure market continue to expand dramatically. Now that we understand what Nebius does, let's kind of take a closer look at CoreWeave. Now, CoreWeave is a little bit different in forms of size, right? This is a company with a market cap of roughly $61.4 billion. When Nebius was roughly 10.56. Now, if you were to tell me, Jose, what is the excitement about CoreWeave? Now, this is one that revenue was up 420%. And we're going to look at kind of those charts in a bit, how different they are from each other. But this is a way bigger company than Nebius at the moment. They have a massive revenue backlog of roughly $26 billion, not counting certain contracts like the OpenAI deal that is roughly $12 billion due to the way accounting treatment happens. They are also making huge acquisitions in both the software and kind of the infrastructure market to become kind of a full stack solution. And very similar, they are a technology leader in this space as they do get a lot of this Nvidia GPUs right away and kind of build a lot of these platforms before anybody else. Now, one of the biggest case that we're going to see is customer concentration. Unfortunately, one of the biggest things is Microsoft was roughly 70% of this company's total revenue. Now, if we look at that in quarter one, they mentioned that there is no entity that was more than 50% of the backlog. So we are seeing kind of diversification as they are getting more customers and more AI players in their overall customer base. Now, let's kind of look at CoreWeave. So CoreWeave, as we're going to see, is a lot bigger. They are spending a lot more money, but they do have a lot more data centers. Now, CoreWeave is more of like a pure play in AI infrastructure. They don't really have anything else that kind of Nebius has, right? They don't have the autonomous vehicles. They don't have kind of those other investments in some of those AI software solutions and data solutions and large language model training solutions. And that could either be seen as a bullish or a bearish case, right? The bullish case for Nebius is obviously you have various growth opportunities. The bearish case is you do have kind of management focusing on a lot of different markets. Here, you can say that CoreWeave is only focused in that one space. The company also recently just made an acquisition of Core Scientific to kind of increase the amount of data centers that they own. And this deal is going to be more of a stock-based transaction, so there is going to be some dilution of shares, but not too much dilutions of overall cash and short-term investments from this acquisition. Now, I wanted to look at recent metrics that kind of tell maybe the story between Nebius and CoreWeave. The first thing is looking at forward price to sales ratio. Nebius is a lot more expensive, but that's not the full story. We'll look at it in a bit. So Nebius in forward price to sales ratio is sitting at roughly 13.4, where CoreWeave is sitting at roughly 9.3. Now you would think, Jose, this kind of tells you that CoreWeave is a lot more undervalued than your Nebius, even though Nebius has various growth opportunities. That would be true if we didn't look at this valuation instead. And again, we can pull all this really quickly with Fiscal AI. So this is forward EV to sales. Now, this is kind of adding cash and subtracting debt and giving us the true valuation of this instead of just price to sales. Now, if we look at forward EV to sales, where you include the debt and the cash, you do see that Nebius and CoreWeave are pretty much trading at very similar levels of around 11s. Nebius 11.7, a little bit more expensive, but CoreWeave at 11.1, nothing too crazy. Now, the main reason is obviously long-term debt to assets. So if you have a lot more assets or lower debt, this number is going to be much lower. And Nebius right now is sitting at 0.05. So that's insane. They barely have any debt at all, where CoreWeave here is about 0.36. So Nebius right now is a lot better in their balance sheet. Now, I do believe this could change pretty quickly, right? Especially as they're trying to build out their own AI infrastructure and increase AI infrastructure even faster. You're going to need to buy a lot of GPUs. You're going to need to buy and rent out a lot of data center. That's going to cost money. So I do believe there's eventually going to be a story when Nebius kind of long-term debt to asset ratio is going to start to increase and maybe never get as close as CoreWeave, but it's not going to be to the pristine levels that it's at right now. The other thing here, so we did see some of the bullish cases for CoreWeave, some of the bullish cases for Nebius here. Another bullish case here for CoreWeave is recently there was a BG2 podcast, which they really focus on the AI infrastructure market. And they kind of break down two main players. So right now in the cloud revenue, CoreWeave owns about 2% of the market share, and Oracle owns about 5% of the market. But in forms of shares of Nvidia GPUs, CoreWeave owns about 11% of the GPUs, and Oracle owns about 19%. Now, this to me gets me pretty excited because it tells me that CoreWeave is not slacking, and this is why they have that massive debt. They have a lot of GPUs. Now, in the upcoming quarters, can this market share of CoreWeave grow dramatically where they start to be a bigger portion of the market share here? Very similar to Oracle as well. Now, I do want to say this chart really showcases that Amazon is either lacking in shares of Nvidia and may eventually start to lose market share, but they are still dominating this market dramatically. But for me, Oracle and CoreWeave, especially CoreWeave, only owning 2% of the market, but owning a lot of the GPUs, I think this is going to get pretty crazy for CoreWeave pretty quick. Now, I wanted to kind of just share some slides of these AI giants and kind of put them against each other and why one is worth a little bit different. So we can see right now CoreWeave is worth nearly 60 billion, while Nebius is worth roughly 10 billion. CoreWeave in forms of revenue outlook is expected to have roughly $5 billion in revenue this year, while Nebius is only expected to have about 0.6. Now, in forms of quarter one revenue growth, both are growing at rapid levels. And to me, it's actually pretty impressive for you to be a bigger company and still growing at the same type of revenue run rate as a smaller company. Typically, you see the smaller companies growing at rapid pace. So those are some of the excitements here between and some of the differences between Nebius and CoreWeave. Now, another thing that's different is the amount of data center power that this company has. In forms of the recent acquisition, and if you include the recent acquisitions, they have over 2 gigawatts of potential power to build data center solutions. At the moment, Nebius has expected to have power capacity of around 200 megawatts. Obviously, that can change pretty quickly, but we can see the vast difference in overall data center power potential, which is pretty much what's going to run the AI market. So I want to take a closer look at the bottom line. Which one would I pick at these levels and why? And both of them have two different things. So CoreWeave, I would say this is the momentum trade. They offer heavy revenue base and a tangible backlog. We saw, right, almost $25 billion without counting some massive OpenAI deals, but requires faith in eventually operating leverage to justify its debt fuel expansion. We saw that this one was one of the weakest in forms of overall long-term debt to assets ratio, extremely much higher than Nebius, but it had the backing and that base. Now, Nebius is an early stage bet. It's a smaller, some might say it's a higher risk play. They are really focused in the European market and sovereign AI growth, but they are expanding here in the United States and other parts around the world. Many might say it's priced for near perfect execution, but I don't think that's necessarily the case. I think this actually has a lot of opportunities that it can grow into. A lot of those software solutions, a lot of those other AI investment solutions, a lot of the autonomous vehicle solutions. So for me, at these levels, I think I would prefer Nebius over CoreWeave. Again, that doesn't mean that I think CoreWeave is a bad investment. I don't know. The market can continue to go higher and higher. But like I mentioned, I've been selling out of CoreWeave. I'm still a shareholder. And again, my cost basis is luckily in the 40s. Now, buying right now, though, I would be more excited to buy Nebius because while this is not showing the kind of backlog that CoreWeave does, it has a lot of opportunities and it has a lot of solutions that I can see this being a multi-bagger. Now, maybe if CoreWeave ever hits below the $100 price point, maybe closer to, I don't know, maybe a $50 billion market cap, I might change my mind. But at the moment, I don't think the risk to reward ratio is there for me. Again, stock prices can continue to go higher, but I like Nebius more. And I'm probably going to I'll probably start a position later this week if we continue to stay in these low 40s. Again, if you want to increase and improve your investment tools, Fiscal.ai is the must-use tool. You have everything from charts, from screeners, from AI summaries, from custom summaries, from slideshows, from research, from expectations. The list goes on and on. You can do a full research on a company without leaving that site. So definitely recommend and check out fiscal.ai/Jose for my promotional offer. The link is down below. Take care, have a good day, and see you all next time.